Sam Hodges. I'm a co-founder and head of the U.S. business for Funding Circle. Funding Circle is the world's leading marketplace for small business loans. Inception to date, we've lent out about $1.5 billion to over 10,000 small businesses across the U.S. and the U.K. Marketplace lending is a really exciting trend within financial services. It brings direct access between borrowers and investors in a transparent format where they can transact directly through electronic exchanges like Funding Circle. Now, the reason why marketplace lending has really taken off over the last 7 or 8 years has to do with a couple factors, some of which are linked to the financial crisis. Around the financial crisis, you saw a lot of banks pull back from traditional lines of business that they'd done, but a lot of these trends are actually even kind of on a longer arc than just post the financial crisis. If you look back 20 years, there were 18,000 depositories in the United States. Today, there are closer than 6,500. That's accelerated post the financial crisis, but it actually is a much longer trend. Now, beyond just the financial crisis and the dislocation you're seeing in the banking sector, marketplace lending is also playing to a couple of other kind of mega trends that are really important. The first of those are shifts in consumer preference. Consumers are very comfortable going online and looking for credit, be it a consumer or a small business owner, regardless of whether you're trying to refinance credit cards or looking for a term loan, in our case, to expand your business. Marketplace lending provides a very fast, simple, and online way for you to get the capital you need to do one of those things. The other big megatrend that marketplace lenders are playing on is basically access to data and the ability to pull a lot of information around a borrower, again, be it a consumer or a small business, really understand how that credit should perform, and then price the loan in such a way that makes sense for the borrower. Using technology to enable both those things in terms of a great borrower experience and also credit that's priced appropriately, those are really the fundamental anchor stones for the marketplace lending trend. Well, I guess what I'd say is we are complementary to many parts of the banking system and to many banks. We've partnered up with Santander and RBS in the UK, and I'll soon be excited to announce a couple partnerships with banks here in the United States. So we tend to think that banks are very good at many things. They obviously have incredibly cheap cost of funds. Typically, they care a lot about the customer experience and have deep relationships with many of their customers. And what we can bring to bear as marketplace lenders are technology, our risk analytics, and a low-cost structure that allows us to process loans that may not be profitable for a bank to serve. So overall, we think it's highly complementary to banks. At the same time, I do think marketplace lending is disruptive, but it's more disruptive actually with regard to other non-bank lenders than it is to banks themselves.